Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is a very special guest, mining mogul and global philanthropist, Frank Giustra. Welcome to Wall Street Silver, Frank.
Hey, nice to see you. How you doing, Ivan?
Yeah, I'm doing great. It's an absolute pleasure having you on, Frank. So, Frank, why are you so bullish on gold today? Everyone wants to know.
Well, listen, I've been bullish on gold for quite a while. I bought my gold over 20 years ago. I've never sold it. I've only added to my positions. And listen, everybody knows the main reasons why gold is up. Right now, gold is moving higher on the chart. It looks great. I think a lot of it has to do with all of this accelerated central bank buying around the world, which has started about 12 years ago, but has really accelerated, especially in the last year or so, and which leads people like myself and others to conclude that there's something else happening here outside of the normal central bank buying. That the basis of it is something that it's much bigger.
A lot of the central banks have been buying gold, but particularly China, India, Russia in the past few years. And one of the comments you've made in the past is China's gold reporting system is very not transparent.
To say the least.
Yeah, to say the least. But for some reason, I mean, they once reported in 2019 some numbers, and then the previous time was 2016. But they've just recently, 2 months in a row, November and December of 2022, they updated their gold numbers. Number one, I guess my question is, why? And number two, do you believe them?
Well, no, and the why part of it puzzles me too, because as you say, China has a habit of announcing their gold reserves, and then they stop announcing their gold reserves. They've been doing this since 2003 for a few years, and they come back, and when they announce the next time, they have much larger reserves. And then they stopped reporting in 2019, and just in the last 2 months, they've reported, like 30 tons each in the last couple of months. I don't buy it for 1 minute. China is the largest gold producer in the world and has been the largest gold producer in the world since 2007. It's the largest gold importer in the world. No mine gold is allowed to leave China. I believe they have a lot more than the 2,000 tons that they're reporting, and that there's an objective at play here. And I've been saying this for quite a while. I think that when they're good and ready, they will announce what they really have, and it will be with a purpose. And the purpose will be what I believe is we're heading into a global monetary system reset. And it's not only China, but many other countries have been buying gold through their central banks in the last couple of years, and it's consistent, it's accelerating, and there's a purpose to it. They're de-dollarizing, and gold, in my opinion, will be part of whatever this reset that's coming. Gold is going to play a role. Exactly how, I'm not, can be many, many different ways. We could spend hours talking about that, but I definitely believe if there will be some sort of a competing reserve or trading currency coming, whether it's a group of nations or as a single nation, it will have to have gold backing. As every currency in history that's ever been introduced, including the US dollar, they all start out with a gold backing or a partial gold backing. And I think that China is playing its hand very, very carefully, not to spook the gold market, not to telegraph that they're out there accumulating a lot of gold. And when they're good and ready, they'll let us know.
Every currency is introduced with a gold backing, but can we only get there after the U.S. dollar or the euro, or I guess more likely the Japanese yen fails, right?
I don't think they need to fail. I think what's going to happen, unlike the Bretton Woods Agreement, where you had a consensus with nations around the world, I think that this monetary reset will be forced upon the West, which is Japan, Euro, and the U.S., by the creation of something else, which includes Russia, China, the BRIC countries, Saudi Arabia, Iran. All of them are making noises now about wanting a different currency system. They're now seeing it out loud. What that's going to look like, I don't know, but it's coming. And it's not that the U.S. will fail, is that a lot of the global trade is going to go towards either one new system or multiple systems. And now you've got even South America, Brazil and Argentina talking about creating a common currency, much like the euro, which they would invite other South American countries into. And there are multiple conversations taking place about gold-backed rubles, and Iran and Russia are talking about one. You won't know where this will end up until it happens. They're certainly not going to tell you until they're ready. But it's definitely in play, and that's why I think you're seeing the gold price finally started to run up.
What you were saying with China, I want to go back to that. China now has the Shanghai Gold Exchange. And what we notice on Wall Street Silver, we track the flow of silver and gold from COMEX and LBMA. There's a lot of different accounts on Twitter that really track this data closely. And the Shanghai Gold Exchange seems to have gold at a premium over COMEX and LBMA prices. And at the same time, we're seeing inventory levels in the vaults in COMEX and LBMA declining gradually. Right. Is it gradually just, we're not talking about central banks, we're just talking private holdings, investment holdings, ETFs. Is it gradually being drained out of the West into?
Oh, it has been since 1995. Gold has been moving from west to east on a very consistent basis since 1995. 46,000 tons has moved from west to east over that period of time, and now it's accelerating. The premiums that are being paid is because there's a very big difference between paper gold and physical gold. And if you want to buy physical gold, you're going to have to pay a premium today. And this is because of the games that the LBMA and others play to suppress the price of gold, which they've done quite successfully for a long time. So I think now you've got the not only the Shanghai market, you got this conversation about a Moscow gold standard to create another exchange outside of the West, and that is simply because the gold owners outside of the West want to see a proper pricing of gold, and they believe that that's not taking place right now.
Frank, does it concern you? Because we're talking about every central bank outside the West is stockpiling gold. So does it concern you that the U.S. dollar will not be the reserve currency in the future? Like, what will you see for your grandkids or your kids?
Yeah, it does concern me because I can assure you of this: whatever is at play between Russia, China, the others, the BRICS, the global South in general, which represents 80% of the world population, whatever's happening there that's in play that will eventually challenge the US dollar is going to be problematic for the United States. And I can assure you that the US will fight it tooth and nail. They're not going to allow this to just happen without a big fight. And that does concern me because I think, we're all already living in a very fragile geopolitical world right now. The global order as we knew it since World War II is gone. And everything's in influx, and you've got basically Russia fighting a proxy war with the US in Ukraine. And so, yeah, of course I'm worried because throughout history, every time you've had any kind of a shift between one global power to another, it's extremely rare that it happens without conflict. So yeah, I'm concerned. I'm very concerned. I would rather we have a global consensus change with a new Bretton Woods 3, as Credit Suisse likes to call it, where everybody agrees on some mechanism to change. But I don't think that's going to take place. I don't think that there's enough reason for the West to give in to what the East and the South wants.
Now you said we're not going to give up world reserve currency status without a fight. Do you mean like an economic fight or more of a kinetic war fight? Or is the Russia-Ukraine perhaps a proxy war of we want to make that war happen and hurt Russia to, drain Russia's resources? Is that part of it?
Yeah, I think it is part. I think there's a definite desire on behalf of the United States to weaken Russia through the war in Ukraine. And I do believe that from the US's point of view, it is a proxy war. And that's certainly the way they're behaving. It will be an economic fight. It hopefully won't end into a kinetic war, but it could. And the U.S. will use all sorts of sticks and carrots with the global South to try and prevent it from becoming a movement that involves everybody but the U.S., Europe, and Japan.
What's going on in Russia, Ukraine? Let's sort of transition over to energy in Europe, because that's a big topic right now. Russia, we have all sorts of sanctions going on them. This has forced most of Europe to stop consuming Russian natural gas. What now Europe, and particularly Germany, has to go out on the world market and suck up all the LNG, taking it basically from Japan and South Korea and all those other countries that are also competing for LNG shipments, and driving up the price of natural gas globally. I know one of the companies that you're involved in is a company called MCF Energy, which is also involved in natural gas, and you're a big player in that one. Is that the thesis? Is Germany and those countries in Europe have to start building their own resources?
Yes, and I'll get to MCF in a moment. But this all started with an article that I wrote last fall, I think it was October, about the European energy crisis, and how I felt. My opinion was it was a self-inflicted wound by Europe on itself, and that Russia had made gas indispensable and very affordable for many years, and it helped discourage onshore exploration in Europe, encourage Europe to move towards a clean energy policy while supplying very cheap gas. And with the start of the Ukraine war, Europe got caught with its pants down, and now is scrambling to find, to reduce its gas dependency in Russia, and also move towards clean energy, and all things that will take many years to unfold. And they were lucky that this winter has been a mild winter. They got very lucky. What worries me and others that have written about this is that this crisis will last at least 3 or 4 years. And next winter could be a real problem, because Europe is still getting some Russian gas. If that gets completely cut off and they don't manage to find alternative sources, they're going to be in real trouble next year. And so I decided to make a bet with a group that I've known for many, many years, that I made a lot of money with in the past, in the oil and gas world. And we saw that there was very little, if there's hardly any competition for onshore projects in Europe. So we decided to create this company, which I must say, it's very early stage, and there's a lot of risk involved here. Okay, so I'm not, this is not by means a lay down, but I'm working with a very good group that knows what they're doing. We're first movers. We're seeing a lot of opportunities that we want to look at, which involve both discovery and acquisitions. And we have a great team, and I think that it's worth the shot. I'm taking a shot. I've done these sort of things before. Usually they work, sometimes they don't. But I'm pretty excited about the opportunity, because we're kind of alone there. And I think Europe has to move very quickly. And as you said, China is Europe's largest competitor in LNG gas. China just tripled its LNG long-term contract purchases in the last 2 years. And now, as they're coming out of this post-COVID reopening, it's going to get even more competitive. And the irony in all of this is that Europe, which shunned shale gas exploration, not that we're looking at shale, but that shunned it, is now importing American LNG gas that's coming from shale. And to me, that's a lot like the irony of Russia now selling its oil to Saudi Arabia, which then in turns and buying it at a discount and then selling it to the West. So all of this craziness. But the bottom line is that Europe recognizes now that gas is an important part of its, and they've now designated gas as a clean energy for investment purposes, which allows us to go and look at things that we think are important. So I think, like I said, we got a great team. We're looking at a lot of opportunities. We're just beginning. We're first mover, but it's risky. But I'm taking a shot.
So Frank, the big question a lot of people are debating on Twitter and, on Wall Street Silver, on our Reddit community, is, will the Fed pivot? Will the Fed pause soon? Or will they actually go back to cheaper rates, be forced back to cheaper rates? And then how does that impact gold, and of
Mhm.
course, what we care about, silver, which is far more important than gold. But what do you think happens when are we just waiting for the Fed to pause at this point, or do they need to actually go to cheaper rates?
I think they'll pause first. I mean, they'll have to pause. And I've been saying this for a long time. I don't know how you service globally $300 trillion of debt that has doubled in the last 10 years at these higher rates, especially the US government, the $31.4 trillion of debt. At 4%, you're talking about $1.2 trillion. They can't keep these rates up there for long. Something's going to break somewhere, okay? And I've been saying this. So I think that they're getting very close to the pause. The US is already heading into recession. You're seeing it happening with all of the indicators. We're going to get a recession in 2023. And at that point, they will pivot, okay? And if, God forbid, another crisis happens, and by the way, much like in 2008, we thought the system was fine until it wasn't one day, okay? This is even worse. You don't know what's lurking in the shadows out there with all of these derivatives and all of this debt. There, we saw almost a crisis in the UK a couple of months ago with the gilt market. Something could break that creates a crisis. And in that scenario, rates will come down very quickly. And then you will see more money printing. I think we're in an endless cycle because they're in a trap that they can't escape out of. They've created far too much debt that is impossible to unwind. And so I think that eventually, pause, pivot, and a faster pivot if some crisis happens with these higher rates.
Interesting.
And then back to the government, whenever they have a crisis like that, they go to more unemployment benefits, they go to more food stamps, they go to maybe stimmy checks being sent out to everyone, $1 trillion extra spending bills. And before you know it, you got a $3 or $4 trillion annual deficit. And before you know it, you're at 40 trillion in debt, 50 trillion in debt, and the Fed has to buy half of it.
Yeah.
And the Fed's at a $20 trillion balance sheet. I mean, what happens to gold in that scenario? I mean, are we looking at 2,500, 3,000, or
I've never, Jim, I've never predicted gold prices. People have tried to get me to predict gold prices.
I thought I was going to get
sorry,
you.
Guys, listen, I'll tell you why, because everybody ends up looking like an idiot when they predict any prices. Okay, I don't predict anything. I just know that I studied this for like over 2 decades. I've studied history. The patterns are all the same as they've always been. It will unfold as it will unfold, and gold will be much, much higher. I don't know what price that'd be. And that also depends on whether gold is part of this monetary reset that I see coming, which I believe it will be, and whether they, let's pretend for a moment that it's China, Russia, and the BRICS in general, with a few others, and they create a new trading and settlement currency that's partially backed by gold. Is it partially backed to the tune of 15%, 20%, 40%? You've seen all these things in the past. And how much gold will it take to revalue gold to a new level? So it could be done again by consensus by part of the world, not necessarily the West. And they could reset the gold price, or gold will just run on its own because of the loss of confidence in paper currencies in general. But you can't play this game forever where you're printing money endlessly and the debt is growing endlessly. That does not end well. And the only thing that will survive will be hard assets like gold. Every paper asset that you can think of is going to be destroyed eventually. So I'm a believer in hard assets in general, and gold is the primary hard asset.
And that's what one of your companies, you have a gold company also. What's the name of it?
Aris Gold.
Yeah.
Aris.
We'll put the link in the description.
Okay.
But what's the story there? Why are you excited about Aris?
Because this is the 4th gold mining company, major gold mining company that I've created in the last 20 years. Okay. It was Gold Corp, the first one in 2001, Endeavor Mining in 2009, Leah Gold in 2016, and this is Aris is the 4th. And it's we're already producing 250,000 ounces a year, very low cost, generating $85 million a year in free cash flow, and we have a path to get to 600,000 ounces a year. And the stock's still trading under 500 million US market cap. Management owns 6%. I'm not on the board, but I'm an advisor, and I own 8% roughly of the company. And we have 25 million ounces in all categories. I mean, that's a lot
that's a
of
long
gold.
runway. That's a long
lot
runway.
of runway. So yeah, I don't invest in a multitude of gold mining companies. I like to focus on the ones that I'm involved and help building. And I've done okay doing that over the years. It just seems to work.
I'd say you've done okay. Yeah, that's true.
Yeah.
So Frank, thank you so much. I know you're tight on time, and we really appreciate you giving us a little bit of your time and coming on Wall Street Silver for the first time. And we would love to do it again, in the next few months.
And next time we can talk about silver.
Yeah. Well, hey, let's talk about silver right now. What's your outlook on silver?
Yeah, my outlook on silver is, listen, I'm not an expert on silver. I don't pretend to be an expert, but I have been watching it as I've been watching gold for 45 years now. And the only thing I can tell you about silver is that it generally overperforms when there's a bull market in gold and underperforms when there's a bear market in gold. And sometimes it does really crazy things. Like I remember I'd been in the business 2 years in 1980 when I watched the Hunt brothers try and corner the market, and they took it to silver, took on margin and borrowed money, and they took silver to $50 an ounce before the COMEX changed the rules on margin on them and destroyed them. And by 1988 they were bankrupt, and silver was back down. I actually met Bunker Hunt in the mid 90s and completely broke.
Really?
Sell me some mining ideas somewhere or other. But silver is an interesting one because it's really an American focused investment. It's a lot of Americans who I still think are still a little bit pissed off about the 1873 Coinage Act that where the US basically said, well, you can't mint silver into coins anymore, but you can still do it with gold. They're still pissed about that.
I'm still pissed about it. I remember that day. I'm pissed.
And so you have, and they're fanatics. They're more fanatical than gold bugs, but not as fanatic as the crypto maxis. They're fanatics, and I love it. I own silver. I don't own as much silver as I own gold, but I think silver is fun, and I like to own some.
That's
but
good.
it will probably do really well in this gold run.
Yeah. Well, Frank, thank you so much, and we're definitely want to talk to you again later this year as things develop.
My pleasure.